In this video, I'm going to show you a simplified version of the silver bullet strategy. I'm going to list you literally everything that you need to do in order to pass your funding challenge. It doesn't get easier than this. Guys, I promise you, if you follow the strategy step by step, that you will be successful with it. Also, I will be including a giveaway inside of this video, so make sure to watch it till the end in order for you to know how to participate. Okay, so first of all, what is a silver bullet strategy? Silver bullet strategy is a strategy created by ICT, the inner circle trader. I have to say, even though it is very simple, it was still complicated for a lot of people. So basically, the silver bullet is 1 hour, 1 setup and 1 strategy. So the setup occurs 3 hours a day, but it is constantly a 1 hour time window. Then you have 1 setup, that is your silver bullet setup, and 1 strategy, there is only one way to trade it, right? And only 1 strategy because you're going to trade it the same way all the time. Then, what are the hours? First of all, we have London hour. This is from 3 to 4 a.m. and keep in mind, guys, that this is New York Standard Time. Then we have New York AM session, this is from 10 till 11 a.m. and we have New York PM session, this is from 2 till 3 p.m. Then the best pairs to trade silver bullet in my experience, and also I think what ICT himself recommends, is NES 100, Euro USD and GP USD. I think in general all the indices will work just fine, but I'm a forex trader myself, so I like Euro USD and I like GP USD. That's why I choose to trade them. Then the rules, very important. First of all, we're only going to trade one of the 3 pairs, so NES 100, Euro USD or GP USD. Then I only want you to trade within the time windows. Very important, the entry needs to be inside of the time window, not the exit. Then, if your stop loss or your take profit has not been hit before 4 p.m. New York Standard Time, I want you to close your position, right? Silver bullet is a strategy that is more of a scalping strategy and is in and out. So I don't want you to stay inside of a trade for too long. And basically after this time, market will be dead anyway and there will be no volatility for us to get a decent trade. So better off to just close it at 4 p.m. Then I want you to wait for the first 1 minute fair value gap to occur and enter the position with a limit order. What goes for your stop loss? You put it on the first or the second candle of the fair value gap, whichever one is highest or lowest. Whichever one is highest when you have a bearish fair value gap and whichever one is lowest when you have a bullish fair value gap. I want you to target a simple 1/2 risk to reward. Nothing else, guys. I don't want you to target a 2.2 because that's that high, has definitely liquidity above it. I don't want you to target a 1.8 because you don't think it is going to make it. No, always, no doubt about it, no excuses, 1/2. And then the 7th rule, very important, don't do anything stupid other than the 6 things listed above. Then what goes for risk management? I'm always preaching this, that we have 2 approaches to this when it comes to your risk management for your prop firm. You have your aggressive approach and you have your conservative approach. For your aggressive approach, you're going to be risking 2% per position. If you have a 4% loss for the day, stop trading because you can only lose 5% in a day. When your 8% and 5% are hit, you close your positions. Then the conservative approach is the same thing but only with 1% and you stop trading when you hit 2% loss for the day. Now, what are the pros and cons? Of course, the pros with our aggressive approach is that you can basically pass your challenge in 2 trades, so you have a lot more potential gain. But the downside of it is that you can lose your account very easily. If you get yourself inside of a losing streak, your account is gone, right? While with the conservative approach, it will take you a bit longer to pass the challenge, but you will also be much safer and much more likely to stay alive during those losing streaks. So I noted this on the bottom, only risk what you can afford to lose. If you are going for the aggressive approach, just know that you can lose this account. So if you can only afford a 100k challenge, try go for the 20k challenge, right? So that you can do this 4 times over. And also with the conservative approach, only risk what you can afford to lose. Even though it is less likely to lose the account this way, still always know that this chance is there. Okay, so that's that. I think that's clear. Now let's go into FX replay to backtest the strategy and see if we can pass a challenge with it. Before we do this, of course, we're going to try to pass our funding challenge with this. You need a good funding company. And if I can give you a recommendation, it will be Funded Next. Funded Next is at this moment doing a buy one, get one offer. So when you purchase an account and you use the code BOGO, you're automatically eligible to enter a giveaway that has prizes up to 200k. And the total prize pool is over $2 million in funding challenges. This offer is valid until August 31st. So I would say if you're looking to buy a challenge, you might as well get this one, since you have the chance to get 2 out of it. Also, one of the lowest spreads in the game, one of the lowest targets in the game, and you get paid for your gains during your challenge. So check out the link in the description, use code BOGO to get your buy one, get one offer. And I would say give this strategy a try on there. So right now we're in FX replay. We took Euro USD with us, one of the 3 pairs that was listed. We're on the 1 minute, and as you can see, we have blue and red boxes. This is called the silver bullet indicator. Basically what it does, it is going to mark these boxes out for us so that it will be really easy. These are fair value gaps. and it will mark the sessions out for us. What we're going to do, we are going to trade every single bullet session. So we're going to trade the London, the AM New York, and the PM New York. What you also can do is you can only choose one of the 3 sessions and only trade that one. It's also perfectly fine. But for the video and for easiest sake, we're just going to trade all of them. So right now on FX Replay, you have a button at the top and it says go to. With this button, you can go to the next session, to the next day open, or to the next silver bullet session. So that's what we're going to do. We're going to go to the next silver bullet session, and that is exactly right here. So as you can see, this is the line of the London session, the start of the London session, and we are going to go to the first fair value gap that we see. This is the first fair value gap that we see. We're taking a short position from here. Our stops are above the highest point of this one. Our stops above the highest point of the fair value gap. We're targeting a 1/2, and that's the trade. Also something very important that I forgot to mention. So inside of your rules, note this down extra. You want your stop loss to be a minimum of 3 pips. So for example, if our fair value gap was only this big and our stop loss needed to be something like this, no, it's a no-go. We do a minimum of 3 pips like this, right? So there's also a rule that you need to put inside of your trading plan. We're using a 2% risk. Safe, let's go. And let's see what it is going to do. And remember, the target does not have to be hit inside of the zone. It can also be hit outside of the zone, but as long as we close it before 4 p.m. New York Standard Time. As you can see, we got stopped out. We're down 2%. It's not that big of a deal. We are going to lose trades. That is part of it. So we're going to go to the next silver bullet session. Let's wait for the first fair value gap that we can find. That's this one right here. Short position. Stops above this one, but now it's not even 1 pip. So we're going to do at least 3 pips. Targeting a 1/2. Position. Placing the order. 2% risk. Let's go. And target has been hit. So now we've made up for the loss that we took and we're up 2%. We're going to go to the next silver bullet session. And guys, if you're trading all 3 silver bullet sessions, you will have a lot of trades. But that's part of it. And that's not that big of a deal if you are keeping yourself to your risk management rules. So first fair value gap that we encounter is right here. We are having a 3 pip stop loss like this. Our target is 1/2 like this. We are placing an order 2%. As you can see, target has been hit right there. So let's go to the next silver bullet session. And at the moment we're up 6%. So we only need a 1/1 right now in order for this to be a success. Let's go to the next silver bullet session. That is right here. Stops underneath the low. This is above 3 pips. And we're only needing a 1/1. So I'm going to be targeting, let's say a 1.1 since we are having spreads and all of that. So let's do a 1.1. Okay, we are stopped out immediately. So now we're down 2% again and we need 4%. So we are up 4% in total and we still need 4%. There we go. Fair value gap, entry, stop underneath the lowest point of the fair value gap. And remember guys, fair value gap is not that gap right here. Fair value gap is a 3-bar formation. So it is the first bar that creates a fair value gap. It is the middle bar that creates the imbalance, and it's the third bar that closes the fair value gap, right? That is the fair value gap, 3-bar formation. So place the order, 2% risk. Let's go. Okay, we're immediately stopped out. That's not a problem at all. We're still up 2%. Let's go to the next silver bullet session. So let's wait for a fair value gap to occur. There it is. Let's take our entry. Stops at minimum of 3 pips, targeting a 1/2, place the order, safe. And guys, it is really important that you only take the first fair value gap that you encounter, not the second one, not the third one. It doesn't matter, still only take the first one. We're back to break even, we're at 0. We basically lost all the gains that we made, but that is part of it. And there's no worries at all. You have to trust in the process and you have to trust in the strategy. So right now, stops underneath the low, targeting a 1/2 position like this, placing the order, safe, and let's go. There we go. It was a success. We're up 4% again. We're going to the next silver bullet session. There is our fair value gap straight away. Stops above the candle that forms the fair value gap, targeting a 1/2. If this one is a winner, we pass the first challenge. And it is. So guys, this is basically how easy it is and how mechanical this is, because I'm only entering on the first already gap that we encounter on the 1 minute. It doesn't get easier than this, right? It doesn't get easier than this. Now, the most important thing inside of the strategy and the most important problem that you will be having will be your psychology. If you're losing a couple of trades like we had before, we were up 6%, but you lost it all. Like I said, rule number 7, don't do anything stupid. Even if you lose 10 trades in a row, which is very, very, very less likely to happen. But of course, it can still happen. Don't lose your mind over it and just focus on the process. I have backtested this even more. I have backtested the whole month of January that we started in right here. And let's go to the results. So these are the results of the silver bullet where we're entering on the 1 minute on the month of January in 2023. So as you can see, we started off quite strong. This is where we completed the challenge and we kept on going very, very, very strong. So as you can see, at the middle of January, over the middle, at the 23rd of January, we were up 27%. We were up 38k, guys. So basically this is 38%. I don't know why they're saying 27%, but it's 38k, guys. So a 38% increase. After that, we did encounter that losing streak that I was talking about. As you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades in a row that we lost. 12 trades in a row that we lost. So we lost around 24k on this one. But like I said, don't make yourself crazy. Just keep yourself to the plan. And after that, we were continuing higher. So our average versus what was 2, because we were only targeting one of 2. Our max versus what was also 2. Our ideal average versus what was almost 5. This means that we are closing at 1/2, but most of our trades were running up higher than that. So our ideal average versus what would have been 5. That's very nice to know. Then what we could have profited or break even. So basically this is whenever you're going above 1.5R. We could have put it on break even, but we didn't, and it turned out in a loss. So this is this stat right here. Then very nice to notice is that our average duration of a trade is only 15 minutes, guys. So if you have a job or if you are just too busy to do other things than trading, and if your time window that you can actually trade on is so small, it's only 1 hour, this is for you guys. This is exactly for you. Then performance per day, as you can see, this was a glitch because we can't trade on Sunday, so it is even a little bit better, the stats. But Tuesday, very, very bad, right? So right now I know this, and of course, in order to get a complete picture of how these statistics really look, you need to backtest a whole year. But let's say if we're just going off these statistics, we're going to skip Tuesdays, right? We're going to skip Tuesdays right away because they're losing money for us drastically. And these were the stats of that trading month. So guys, what goes for the giveaway? So what do you need to do in order to participate the giveaway? You need to like this video, share this with 2 friends, comment down below why you want to win this challenge. I will be picking 3 winners randomly and I will be sharing them on my Instagram stories. So make sure to follow me there as well. Guys, I hope you enjoyed this video and I will see you in the next one. Bye bye guys.